On today's Hashi, I'm discussing the just released October CPI report, rising home values in the top 10 opportunity zones, and mortgage application data for the week. Today is Wednesday, November 13th, 2024. I am Byron Lazine, and the hot sheet starts now. Good morning and welcome into the hot sheet. Let me know in the live chat which market you are tuning in from. Today, I'm in beautiful and appears to be sunny Clemson, South Carolina. I don't know if Clemson is actually a town, but we are in the middle of the university here. I'll be talking at an event later today and then on to Nashville tonight. I see that Colorado, Arkansas, Montana, Seattle, we've got a bunch in the house here today. San Antonio, Kristen, what's going on? Hope you guys are doing well. If you get value from the hot sheet each and every day, please hit the thumbs up so that this live stream can reach more agents of change just like you or anyone who wants a 24-hour look back on the housing industry. We have a CPI day today. That's a big day. We're looking for inflation to continue on its path downward. If that happens, we could see a 2025 market that has lower rates. We're expecting that to be the case. That's the projections and the analysis that we have so far, that we could be trending towards 6. Nobody is saying 5. We're talking about getting hopefully towards 6. We broke 7 again yesterday on the 30-year fix. So what does CPI look like today, and what is the 10 years reaction to it? Headline is that the annual inflation rate is meeting expectations, 2.6% on CPI. That's above the target of 2%. When we took a look at, the decision to cut last week, Jerome Powell and the FOMC made that decision to do a quarter-point cut. One of the questions that was asked, we covered this on Monday's hot sheet. One of the questions that was asked of Jerome Powell during that conference was, hey, if you look at the inflation metric that they use, PCE, you're seeing that inflation was actually at 2.1%. He referenced the core number or being at 2.3. So there's different ways to look at this. CPI tends to be the number that the markets look at. Obviously, markets since the election, stock markets, equity markets have been on an upswing, a roar, setting records. So we'll see what the markets react to this data as well as we move through the day. Inflation perked up in October with, though pretty much in line with Wall Street expectations. So this number here at 2.6% is moving up a little bit. Okay. Now, if you think back to Q4 of last year, you started to see inflation ease in Q4. Powell kind of referenced some of that, like as some of that data, the low data, especially of November, December, rolls off the calendar on a 12-month look back, we may see, as expected, which was again in line with expectations for this to move up a little bit from 2.4 in September to now 2.6. You may see these slight increases. This is where, when they say inflation is sticky, this is one of the reasons why. Okay, there's going to still, even now that we've made all this progress, be some bumps in the road. What is keeping inflation high? Of course, we know what it is. It's the index for shelter and the lagging data that they use in this metric. Shelter rose 0.4% in October, but it's not just that. It's the fact that it's accounting for over half of monthly all items increase. So shelter continues to be the biggest driver in what Jerome Powell calls a weakening, housing market. Okay, the 0.4 is up from 0.2 in September. That was the first, month that we really saw a signal on, shelter moving down. We thought maybe some of that lagging data, or had hopes anyways, that some of that lagging data was really starting to come into the CPI. Remember, we looked at it yesterday. If you look at current rents, rents that are taking place right now, leases that are taking place right now. And even Jerome Powell himself said this during his press conference on Thursday of last week. You look at current rents, inflation is not there. In fact, it's moving down. Issue with this shelter metric that we use is a lot of the rents, a lot of the leases are a year and 2 years old that are still showing up in this data. On top of that, we use what's called owner's equivalent rent. Owner's equivalent rent is now up to 0.4% on the October number here, 0.4 after being 0.3 last year. Owner's equivalent rent makes up 27% of the CPI report. Shelter in and of itself makes up 36.5% weighted. Okay. When you look at owner's equivalent rent, that is, to me, it's like the comparison of the polls before the election. Oh, this is going to be a close election. Iowa thinks that Harris is going to win. And then all of a sudden you look at Iowa and it's the complete opposite. When you're polling, owner's equivalent rent of residences is a 1980 metric used to poll homeowners of if they had to go rent their house or a similar house, what would the cost be? It's a ludicrous way of figuring out the market when we have all of this real-time data. And so if we had a bigger emphasis on real-time data, and when we looked at Austin yesterday, 10% down, or Jacksonville, or some of these other locations that have had, a serious influx of multifamily inventory, you're seeing those prices come down nationally, coming down on the overall number. Some pockets like the Northeast and areas in the Midwest are, being a little bit more sticky because of those inventory issues. So shelter overall coming in at 0.4 versus 0.2 last month. Rent of shelter 0.4 versus 0.2. Rent of primary residence stayed flat at 0.3. When you look at lodging away from home, we're not really focused on that, coming in at 0.4 after minus 1.9 last month. Big one again would be the owner's equivalent rent at 0.4 over 0.3, and owner's equivalent of rent of primary residence coming in at again 0.4 there. So you can get into some of the more some of the lesser categories here in the CPI. You look at, they've got water and sewer trash collection services. That looks like it's down. Household operations coming in at negative 0.3%. Medical care services trending down 0.7 to 0.4. Hospital and related services, that bumped up. Transportation services down from 1.4 to 0.4. Okay, so there's a lot of categories. How about motor vehicle insurance? That's goes from 1.2 in September to negative 0.1. That moved in the right direction. Motor vehicle fees moves from 0.9 the month prior to negative 0.1. Public transportation stays flat at 2.4 over 2.4 when you look at September versus October. Pet services, okay, goes from negative 0.5, moves up a little bit, but still negative 0.2. Education moves from 0.1 to negative 0.2%, moving in the right direction there. So you've got a lot of categories outside of shelter that are moving in the right direction overall. That's giving us a 2.6% year over year. It meets expectations. So hopefully no big waves in the markets, as this data was released by the Bureau of Labor Statistics just this morning. Here's your CPI look on a month over month basis. And that 0.2% is where we've come in the last 4 months straight. So we're not seeing what we saw in 22, which is obviously really sharp, high numbers, but also volatility. We're more consistent here over the last 4 months, certainly on the CPI, and it appears that we are trending in the right direction. Obviously, with the new administration coming in and the plan to implement more tariffs, as CNBC, and then what CNBC is saying is an increase in government spending. There's a potential to boost, obviously, growth with that, but to aggravate inflation. So this is one of the reasons why There's some feelings that the 10-year is going to stay elevated until you see what those, how those plans actually take shape, how they impact the market. Today, the 10-year is down just a tick. We were up to over 4.4, and after the CPI news, if we just look at the 1 day, you can see the decline from 4.250 even now down to 4.38 on the 10-year. See what that does to the 30-year. Yesterday's 30-year did come in higher than where we ended the week last week. Monday was off on the 30-year, coming in at 7.02 on the 30-year. So it'd be nice to see if we can get that back under 7. A 6 handle would be meaningful. We have confidence coming back into the market, especially these last couple of weeks with what people's stock market is doing. Bitcoin hit me. Bobby's over here telling me, he's on the road with me today, telling me he is all smiles about his Bitcoin account. What is it today? 89. It was 89,000, hitting an all-time high yesterday. But there's this confidence coming back into the market. If we get a long-term rate to cooperate with that, we need to see labor market loosen up a little bit. We've got to get more data on that before the next Fed meeting. We get labor to loosen up maybe a little bit, as well as inflation reports that are positive and going into the right direction. We could get closer to 6 over the course of this winter. There's a lot of projections and analysis that point in that direction. CME Group is now saying an 82% chance that there will be a rate cut during the December meeting, and that rate cut will be a 1/4 point. Just before the CPI came out this morning, this number was at about 60%, just over 60. So there's been a huge increase just off of today's data. CME Group believes that we will see a rate cut in December. There is some belief out there, and 20% according to CME Group almost, that there will be just a pause in December. There's been indications that we would get 2 more cuts, which would total a full 1-point cut, with the 0.5 point that we saw last meeting or 2 meetings ago, the 1/4 point that we saw last meeting. Markets expecting that other 1/4 point will come, and then we see what the new year brings us. All right, new year brings potentially new opportunity, and there's opportunity zones that are identified by Adam that are increasing home values in Q3 2024. Here are the top 10 opportunity zones that are increasing the value. I'll go to the hot sheet show notes. Hot sheet show notes available for every BAMX member to make your communications, your data, your emails, your text messages easier with your markets. Hot sheet show notes are available inside of BAMX. Use code HOT to get access to those. Here are the top 10 opportunity zones with significant price gains. Kamal, Texas at a 98.8%. St. Joseph, Indiana. Marion, Florida. Orange, North Carolina. Knox, Tennessee. Montgomery, Maryland. Tulare, California. Harris, Texas. Marion, Indiana. And then San Bernardino, California. That at number 10 at 77.8%. So there is, there's sometimes debate on opportunity zones. The report highlights a mixed but generally positive trend in opportunity zones, especially states like Nevada, Wisconsin, and Indiana. Despite broader economic challenges, these zones demonstrate resilience with continued home value appreciation, although the lowest price neighborhoods may remain at risk. Lowest share of zones with annual price increases. Kentucky, 46% of zones. Louisiana, Colorado, Arizona, and Oklahoma. We look at state-specific findings. Highest share of zones with annual increases. Again, Nevada, Wisconsin, Indiana, and then Ohio and Utah also end up on that list. Median prices in 80% of opportunity zones were below the U.S. median of 360,500. Nearly 50% of zones had median prices below 200,000, but they are seeing, those top 10 are seeing substantial increases there. While those median home prices increased in 53% of zones from Q2 to Q3 in 2024, 61% are the annual gains, and nearly half saw year-over-year price increases exceeding 10%. Opportunity zones could be one of those tools used to make housing affordable. All right. And we've talked about, the new administration's plan to use up federal land, opportunity zones, and changing zoning and creating almost a new city environment, or, a new town environment, is another tool. We need to really focus in as an agent community, agents of change, as we move forward in 2025, what we can do to help push that conversation forward on affordable housing. All right, mortgage applications. Mortgages obviously can be one of the big impacts on affordability. If mortgage rates move in the right direction, we will see demand go up. They didn't really move in the right direction. We saw a little bit of relief the end of the week last week. But as we led into the election last Tuesday, we did see mortgage rates go up. The weekly, Freddie Mac weekly did go up last week. So in a week that we saw the weekly move up on the overall, what happened with applications? Overall headline applications did increase last week, 0.5% from 1 week earlier. That is now, I believe, the 7th or 8th consecutive week where we've had year-over-year gains in mortgage application, demand going in the right direction at a time of year when you would expect it to subside. The refinances made up, refinance made up 2% from the previous week. It was refinances also 43% higher than the same week a year ago. What we care about is the purchase index, and that did increase 2% from 1 week earlier. The big number, again, that year-over-year gain, 1% higher than the same week a year ago. I know we're coming off of, what is relatively, significantly low numbers, but we will take consecutive weeks of gains as we try to fight off of the floor that we are hitting on mortgage demand. This again is the worst period we've seen in mortgage application demand since 1995. We're also seeing the worst year in existing home sales since 1995. So any week over week momentum heading in the right direction is a positive. That continues through the winter, and we get closer to a 6 handle with some of the confidence that we're seeing in the market right now. Spring 2025 looks to be dramatically different than 24 and 23. There's your updates here for this hot sheet. I will be joining you guys again tomorrow live, 9:30 East, 6:30 on the West from Nashville. We do have, Brian says, buddy Sean is at this event today that I'll be speaking at. And how about this, Brian? Whatever you want. I don't I don't know if Sean will ask me for that, but let's get Sean to make sure he subscribes to this channel if he hasn't done so already. That would be amazing. Jody says, be looking forward to meeting Sean. They'll definitely tell him to come up to say hello. Jody says, Bitcoin is on fire. A lot of the markets are on fire, and really looking forward to talking to all you guys here tomorrow from Nashville on the hot sheet. We've got some predictions that are going to be released for tomorrow. So make sure that you're subscribed so you don't miss that. I will see you guys then. Until then, of course, toodaloo.